Hello, I'm Hannah, Scribe Support Accountant. This video is an introduction to local council accounting and is intended for new or inexperienced clerks and RFOs. It is an overview of the role and the accounting requirements for local councils. Every local council is required to appoint an officer to be responsible for the administration of their council's financial affairs, RFO, the responsible financial officer, who should be a paid employee of the council. For smaller councils, this is often a role held by the clerk. Their duties and responsibilities include ensuring proper financial procedures are followed, so this could be in terms of the authorisation of payments or obtaining quotes for work to be done, having internal control and audit systems in place, such as the management of petty cash or the administration of payroll, reporting to the council on spending and the current position, preparing the annual budget and therefore calculating the precept, and submitting the AGAR, the Annual Governance and Accountability Return, for the year the 1st of April to the 31st of March. Let's now look at the financial reporting requirements. There are two approaches that can be taken. Firstly, receipts and payments is a simple form of accounts in that it records the receipts and payments at the time at which they were received or paid, sometimes known as cash accounting. And there's also income and expenditure accounts, and this records transactions on the date to which it relates rather than when it was paid, and this is sometimes known as accrual accounting. The council's financial reporting requirements are based on their size, so councils with a gross income and expenditure both under 200,000 can use receipts and payments accounts, although they can opt to move up to income and expenditure if they so wish, and councils over 200,000 for 3 consecutive years do need to use income and expenditure. So if you're in a situation where you found yourself with a one-off grant payment or a large amount of work to be done in one financial year that took you over the £200,000 threshold, you don't need to go over to income and expenditure. It's only mandatory if you've got 3 consecutive years of accounts over 200,000. And as I said, it is optional, so you may be under that threshold but decide that you want to use income and expenditure accounting. It's worth noting though that if you do move between approaches, that you would need to ensure consistency when you submit your year-end accounts. So if you've moved from receipts and payments to income and expenditure, for example, you would need to restate your prior year on the AGAR accounting statement section, but we'll look at the year-end in a bit more detail further along. So let's look next at the accounting records and reports. So clearly it's very important to maintain an accurate record of the council's finances, not only to enable you to run the reports required for your council meetings, but also in order to complete the AGAR at year end. Therefore, the cash book is a very important accounting record for local councils. It is a register of all payments made and receipts taken in, and we recommend to regularly record payments and receipts, including details such as the supplier description, and ensure that you show VAT separately if charged. Allocate the entries against your budget headings or codes to enable analysis of the expenditure and also to assist in setting future budgets. Check your paper trail and accuracy of records and documents, and use a numbering system to assist your audit trail in ensuring there are no gaps. And take a backup, so weekly or whenever work has been completed. Clearly, but this is really important if you do use a standalone system or approach to keeping records. Complete monthly bank reconciliations to confirm the correct bank position against your records, so that will help ensure that you know that your records are accurate and also provide information to take along to council meetings. So in terms of the data found at council meetings, commonly used reports include lists of transactions for the time period, so this may be looking back information what has been received or spent previous month, for example, or maybe looking ahead in terms of a payments listing report for approval for payments. The bank reconciliation to confirm the reported position is correct, and a year-to-date actual against budget, so information about what's been spent against your different budget headings, where you are against that budget, areas of overspend, underspend that may need looking into. Let's move on now to VAT. So VAT's pretty complicated in many areas, and if you do have a particularly complex VAT situation in your council, I would recommend that you speak to a VAT specialist or HMRC, but I'll cover that in more general terms that you can get an idea of some of the things to think about in terms of local council accounts. So councils that are VAT registered must complete a VAT return, most likely on a quarterly basis, but sometimes on a monthly basis. Those who are above the threshold for VAT, which is currently 85,000, must use Making Tax Digital. This means that VAT returns must be submitted online via account software. This is to improve accuracy of returns. For councils that are VAT registered but below the threshold, MTD is optional. So you can continue to submit returns manually, but if preferred, you can sign up for MTD. Many councils are not VAT registered, but are still entitled to claim back VAT, and this is done via Form 126 on HMRC's website. This can now be done completely online, providing that you've made a claim before. Previously it required printing out the form to sign and send off, but now can be submitted online in full, and you can provide an attachment listing of the invoices that you're claiming the VAT back on. So there's also much less restriction on the timing of claims of Form 126, so it would be advisable to try and coordinate a claim with the end of the year, but it can be done broadly speaking whenever suits. So this could follow a large purchase if you had a significant amount of VAT to claim back. If you are claiming for less than £100 though, the claim must be for at least 12 months. I would suggest if you can to claim at least annually, but claims can be made going back up to 3 years. So that may be relevant if you're a new clerk into a position where maybe VAT hasn't been claimed for a while, so you can go back through the records and claim for them VAT back. There's more information if you see VAT Notice 749, which will give you more guidance on claiming and what can be claimed for and how to do so. A couple of points to note as well. So firstly, the importance of accurate records to complete the VAT claim. Clearly, if you're going to claim VAT back, you need to have an invoice showing the company's VAT number and also the amount of VAT that they are charging, and this relates to the cash book and keeping accurate records and the paperwork tying in with the information that you've got. And secondly, when reporting on spending to the council, VAT should be ignored. That's going to be claimed back, so it's less relevant when looking at budget setting and actuals against budgets. So now moving on to looking at year end. A lot of clerks we speak to find the year end daunting, not only because obviously it happens only once a year, so there's a lack of familiarity with the process, and maybe also accounts in general, but also because the extra work involves, there's increased workload around the year end, but obviously the rest of the clerking role continues, so there's quite a lot of pressure on time. However, keeping accurate records throughout the year and completing regular bank reconciliations like we talked about will make the process a lot easier. So the year-end process itself requires completion of the AGA, the Annual Governance and Accountability Return, which is made up of the internal audit report, so an independent assessment of procedures and controls that you'll arrange for someone to come in, so the internal auditor to come in and look through those items. Then there's section 1, the Annual Governance Statement, so the confirmation of the internal controls and them being in place. Section 2, the accounting statements, so the numbers bit, which we'll look at in a bit more detail in a moment. And then section 3, the external auditor report, and that's whether it's relevant or not, and again we'll look at that in a moment. So in terms of section 2, the accounting statements, this is the key part, the key role of the clerk or the RFO holding that information and getting that collated. So in order to do that, ensure all payments and receipts have been entered accurately into the cash book. So hopefully if you've been doing this throughout the year, there won't be too much here to do, but obviously that's really important to do that. Once you've got that information in, you can complete your bank reconciliation to the 31st of March, and if possible also a VAT claim. So if your VAT return runs to the end of March, clearly you'll have to do that, but if you're just claiming it back, then if you can do, I'd recommend trying to do so to the end of the year. Once you've done that, you'll be in a position where you can make accrual and prepayments adjustments if you're working in income and expenditure. So as we said, generally councils will complete month by month on receipts and payments basis with that conversion to income and expenditure at year end. So this is where you need to make those adjustments. This is for items where they relate to the financial year, but they won't be paid to the following financial year, for example. So maybe you had some work done in March, but because of the way payments are approved and paid, it won't be paid for until April, and therefore you'd put an accrual adjustment in for that to take account of the fact that that value should fall into the current financial year, not the new financial year. Same, it might be prepayments if you've paid for something up ahead. So you may have paid an insurance renewal in March that is for the following financial year, and therefore you'd adjust for that to move it into the new financial year. And that's all the things to think about at year end, and identifying those elements that need to be adjusted for. Two things to consider here. One is the materiality, so what amount do you want to adjust for over a certain amount, say £100 for example. And secondly, remember as well, it's not just where you've got a physical invoice. If you know some work's been done or carried out and you're expecting an invoice, you'd still need to make adjustments to that, for example. Once you've made those adjustments, you can enter the figures into the form. Okay, so things to think about here is checking the latest practitioner's guide for any changes. So this is a good guide. It gives you a breakdown of what each box relates to, what needs to go where. so you can fill those in, and also relevant changes for the financial year. Something here to consider is there is a change for 2021 with regards to what constitutes staff costs, so that is something to check out depending on what you currently include, and if you did include things that are now excluded, you would need to look at restating the prior year as well, so be aware of those changes. Also considering what not to include, such as don't include transfers between bank accounts. So it's likely that you'll have recorded movements in your cash book in order to reconcile the bank, but any transfers between bank accounts aren't relevant to the accounting statements on the AGAR because it's just movement within the council. It's not actually physically leaving the council, coming in and out. So simple checks such as checking that the prior year's box 7 has been carried forward correctly to box 1, and incidentally also just making sure that the boxes that you've completed for your prior year are what was actually submitted to the auditor, and therefore and it all adds up as well, so in rounding those figures. So obviously you'll be used to working in pence in the cash book, but they're rounded up to the nearest pound on the accounting statements, and just check that they do add up. It is £2 tolerance is allowable. So once you've done all that, you then just need to complete the accompanying information as required. So you already have a bank rec in order to get to this position, but you'll need an explanation of variances. So this is the comparison of the current year with the previous year, and variances over 15% and then over £200 would need to be explained. So it may be that you had some project work or some grants coming in that was different to the prior year, and it's just identifying those and being aware of them. Okay, so as an overview, your year-end process will constitute providing information to the internal auditor so they can review, completing all sections of the AGAR, holding a meeting to approve and sign off the AGAR. The RFO will then need to set the commencement date for the exercise of public rights, send all the paperwork to the external auditor. This does depend on the size of the council because it may be possible that you can exempt yourself, and I'll look at that in a bit more detail in a moment, and then publish the AGAR on your council website. So you get a lot more information about what is required from your auditor closer to the time of the year end, and there's also a lot more information if you go on their website. As I've put there, be mindful of possible changes such as the impact of COVID. So I've been mindful not to put any dates that are relevant here, as obviously that changed quite significantly this year due to COVID, so just be aware. Obviously they'll send out lots of information about it, but just once you're clear on the process itself, then the dates may change, but you still know what you need to do. Okay, and lastly we can look at the transparency code for smaller councils. So as I mentioned, it may be possible for your council to exempt themselves from the external audit. So this is applicable to councils in England with an annual turnover of less than £25,000. There are a couple of other criteria, so if you do meet that, do look into the other relevant elements there. So councils can exempt themselves from the external audit and therefore only need to send their certificate of exemption to the external auditor. So you still need to complete the accounts themselves, but only the certificate is sent off. So once you're in a position where you know that you're not going to go over the £25,000 and you wish to exempt yourselves, hold a council meeting, sign off the certificate, and once you've done that, send it off to the auditor. You still therefore though need to publish information on the website, on your website, which includes details of individual items of expenditure over £100, statement of account signed off by the RFO and the chairman, accompanied by a bank reconciliation and an explanation of any significant variances to the previous year, the annual governance statement and the internal audit. So all the elements that make up the AGAR itself need to be completed and published. It's just that you're not sending them off to the auditor. And you also need to show a list of council responsibilities, assets and minutes of meetings, and publish them on your website as well. So that's something to consider if you're a smaller council and you don't want to send it off, and then also save on the audit fee as well. Okay, that has taken me through everything I wanted to cover today to give you a bit of a feel for local council accounting, the role of the RFO and the things that they need to complete. I hope you found that useful, but please do get in touch if you have any questions, would like to discuss any of this any further, or if you would like to see how Scribe could help you with your council's financial responsibilities.